So the talk on Wall Street this week was all about the taco trade.
The so-called taco trade.
What is the taco trade and how can you benefit from it in your portfolio? That's what we're going to dive into today. And in the back half of the video, I'm going to talk about the best way you can use this for a long-term focused investor and how you can use this and other events like it in order to benefit your portfolio over the long term. So be sure to stick around for that toward the back half of the video. So let's get into it. First, we got to talk about the acronym TACO before we can talk about the taco trade. So if you haven't heard, which you probably have, TACO stands for Trump Always Chickens Out. So some Wall Street analysts and news reporters are saying that Trump always chickens out as it relates to the steep tariffs that he's saying he's going to impose upon other countries. Every time he said, hey, we're going to impose these big time tariffs, he's cut back each time. It's a big time, super steep threat. And then just a few days later, he walks it back. There's a tariff pause while they do negotiations. And Trump is obviously not happy about this. He had this to say about it whenever he was asked in a press conference. Check it out.
Mr. President, Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
6 months ago, this country was stone cold dead. We had a dead country. We had a country people didn't think it was going to survive, and you ask a nasty question like that. It's called negotiation. You set a number. And if you go down, if I set a number at a ridiculous high number and I go down a little bit, they want me to hold that number. But don't ever say what you said. That's a nasty question. I can promise you, and I have great respect for the people at the European Union, they wouldn't be over here today negotiating if I didn't put a 50% tariff on. The sad thing is now when I make a deal with them, it's something much more reasonable. They'll say, oh, he was chicken. That's so unbelievable.
So as you can see, Trump's pretty frustrated about this, just like most people would be if they got called chickens. And he knows that something going viral like this is not going to help him in his trade negotiations. It's only going to make his job even harder as it relates to these tariffs negotiations. Now we know what the TACO acronym is. Trump always chickens out. So what is the TACO trade? Basically, it's the concept that's been proven pretty correct so far that when Trump announces these big time steep tariffs, you go out and buy stocks, and then they're going to recover over the next few days or weeks because, quote, Trump always chickens out. So he's going to roll back the steep tariffs and then the market soars higher again. Check out this graph of S&P 500 performance year to date. The big one was in April. Trump pauses the Liberation Day tariffs. We had a big time dip. And then after that pause, extreme roar upward with the S&P 500 back near all-time highs. On the way back up, we had another dip around some China tariff fears. Trump talks about lowering tariffs on China. We rip even higher. And then we dipped again on the EU tariffs news. And pretty much right away, he pulled back on that so that they could negotiate and hopefully come to a deal before that new July 9th tariff imposition date. So far, it has worked out really well to buy whenever Trump threatens to impose a big-time super steep tariff, and we have recovered back every single time in the market. There's no guarantee that this trend is going to stay, and me personally, I'm not a short-term player in the market, so this is just interesting more than anything, but there is one way we can use this taco trade to benefit our portfolios over the long term, and it's more of a macro conversation about building a portfolio and market psychology. So all these tariff drops that we've had in the market are fear-based drops. They're not fundamentals-based drops. So if you're a long-term investor in the market, you're probably a very fundamentals-focused person, very fundamentals-focused investor, okay? So if a stock is dropping on fear, but the underlying fundamentals have stayed the same, that is the ideal scenario for a buyer in the market, okay? Let's say I want to buy a stock at $100, and then we get a fear-based drop, and the entire market drops, but my specific stock I was looking at drops to $90 or $85. But the fundamentals haven't changed. The balance sheet's the same. The EPS is the same. The revenue is the same. The free cash flow is the same. But all the multiples are lower and the share price is lower. I'm going to want to buy that stock even heavier at those lower prices rather than the $100 share price that I could have gotten it at before the fear-based drop. That's how you can use this taco trade and any other fear-based situation in the stock market to benefit your portfolio over the long term. You can buy very high quality names that are dipping because the entire market's dipping, not because they had a terrible earnings report. Not because there was company-specific news that's making the stock go down, but because there's a fear-based drop in the market, like tariffs threats that are causing these global trade tensions. The stock market is really good over the long term at fairly valuing stocks, but the stock market is extremely bad over the short term at fairly valuing stocks, and it's really bad at valuing how much impact a particular event is going to have on businesses, okay? So these tariffs are going to have an impact on businesses, probably a negative impact on businesses. But when we see stocks drop 10, 15, 20% because a tariff was imposed, that is an overreaction for most stocks in the stock market. There are some stocks in the stock market that will get hit extremely hard by China tariffs, by EU tariffs, by Mexico tariffs, etc. But most stocks in the stock market, it'll be a slight hit to their EPS, but nothing major. But whenever these tariff threats get announced, the whole stock market drops. So a lot of names end up dropping that have no business dropping whatsoever at all. And like I said, their fundamentals are still intact. So you're getting the same business for a cheaper price. That's the ideal scenario for building your stock market portfolio. In order to take advantage of this, you must have cash around in your portfolio. I don't care what type of market we're in. I want to keep at bare minimum 5% of my portfolio just in cash. We get fear-based drops all the time, and so far 2025 has been a great example of that. I want to be a beneficiary of the rise after the fear-based drop. And in order for me to do that, I have to be buying when fear is high, okay? Using the Fear and Greed Index, using the AIII Investor Sentiment Survey, using the VIX, we can see when fear is really high. Also, you can see when stock prices are dropping, of course. When stock prices are dropping due to a fear-based drop, I am buying like crazy. But the only difference between me and Wall Street and how they're using this taco trade situation, I'm buying like crazy when fear-based drops happen, but then I'm holding those shares for years to go in the future because I'm picking individual stocks that I believe are going to perform very well over the next 3, 5, 7, 10 plus years in my portfolio. The way Wall Street's using this is as a trading vehicle. They'll buy on the dip and they'll sell whenever we recover. I'm not doing that. I don't make short-term moves in the market. So here's one thing that's for sure. Trump is not done with tariffs, okay? There are going to be more things that cause fear-based drops, specifically tariff talks, tariff news, threats of tariff impositions that are extremely steep and high. That is going to happen again throughout Trump's presidency and most likely throughout 2025. The stock market's probably going to drop. There's a time where if this keeps on happening, the stock market will start to get a little bit more immune to this and it won't drop so much. But for now, it seems like every time tariffs are threatened, there's a big time drop in the market. Whenever that happens, go out there and buy quality stocks that you want to hold for the long term that have amazing runways of growth for the next 3 years, 5 years, 7 years, 10 years. You can get those stocks at cheaper prices whenever we get fear-based drops. That's how I'm using this taco trade. That's how I think you should use this taco trade. The most recent example of this I have is with Elf Beauty. I was buying in March and in April, and I have a $64.27 cost basis, which means we're already up 77% on this stock. That's in just a couple of months, okay? Some people would be happy to get that over multiple years, a 77% gain. So we've been able to get that over just a couple of months. Yes, they've had other great things going for them. Yes, they had a great earnings report. Yes, they acquired a new company. But one of the reasons they dropped so heavily was because of those tariffs talks. The tariffs fears absolutely killed Elf stock price and allowed me to get shares at way, way cheaper than I ever thought I would get Elf shares. And now we're all the way back up to $113.50 on Elf, a 77% gain, like I said. Let me know in the comments below if you have any specific examples of stocks that you bought whenever the market was dumping on the back of those tariff threats throughout 2025. I want to hear about it in the comments below. Definitely one of my favorite parts of posting here on YouTube is having some conversation with you guys down there. I appreciate you being here in a major way. Thank you so much. Have a great day.